Good morning and welcome to episode 5 of BuiltPlace's Housing Conversations. Today we're going to be discussing construction with Brian Green and Noble Francis. And so to begin with, we're going to start with Noble, who is the Economics Director at Construction Products Association and an honorary professor at UCL. He's going to take us through some of the statistics and their scenarios for construction following the COVID lockdown and subsequent recovery. Good morning, Noble. Thanks for joining us.
Thanks, Neil, and thanks to everyone who's watching. One of the difficulties of forecasting construction is that you need a UK economic forecast to underpin it, and we're clearly in a period of great uncertainty due to COVID-19, due to the social distancing restrictions. And so rather than our usual economic forecast, we have three scenarios for UK GDP that are based on strong assumptions. What we have in the chart are those three scenarios, the most likely of which is the V shape or the tick shape that is in the blue-grey solid line. And what it assumes is that we have social distancing restrictions easing from mid-May. That enables an initial rapid recovery from a low base in June and Q3, but then the rate of recovery slows. And it slows as we see some of those furloughs turn into unemployment. We currently have 9 million people across the UK economy that are on furlough and 690,000 in construction alone. So if even 1/5 of those turn to unemployment, it clearly has a big impact on recovery. The other two scenarios, which are the yellow dashed line and then the grey-green dotted line, are based upon what happens if we have second waves of coronavirus. The yellow dashed line represents effectively a U-shaped scenario, if you like. So as we ease social distancing restrictions, then we get a further wave, we reimpose some social distancing restrictions, and that wave dissipates, we ease social distancing restrictions, and we go through further cycles of that until we have a publicly available vaccine, which is most likely next year. The W-shaped recession and recovery is illustrated in the grey-green dotted line, and in this scenario we have recovery as the social distancing restrictions ease. So we have recovery in June in Q3, but then in the final quarter of the year with the colder weather we may have a return of coronavirus, either in the same strain but without a vaccine or in a different strain, and we would need to have social distancing restrictions imposed then. But we do assume that we would have a degree of business continuity and a degree of learning from what we encountered in April and May. It's important to understand that in any of these scenarios, UK economic growth, GDP, doesn't return back to 2019's levels until 2022 at least. Now, we're more interested in construction activity, which is on the next slide. And according to the Office for National Statistics, construction output fell by 40% in April. However, it's likely that this underestimates the fall in construction activity. And the reason for that is that the ONS collects this data by a survey of contractors. However, two things have happened due to the social distancing restrictions, which has closed many sites, both house building and contracting sites. It means, firstly, the response rate to the survey from the ONS has gone down from 66% pre-coronavirus to 46%. Not only that, but the firms that are likely to have actually filled in the survey are likely to be those that were operating, that were working. And so what it means is that you end up with what we call in economics survivor bias. So it effectively overestimates the activity, and it underestimates the extent of the fall in activity during the social distancing restrictions. So what it means overall is that not only is it difficult to forecast what's going on, it's even difficult to measure what's actually occurring down on the ground. The indications we have as CPA, this is from talking to main contractors, house builders, SMEs, subcontractor specialists, are that activity in April was around 55 to 60% lower than the same month 1 year ago. But it clearly varies quite a lot by sector. And the indications we have are that house building was around 80 to 85% lower, whilst repair, maintenance and improvements activity, RM&I, was around 60% lower. I won't go through all the sectors because we're clearly focusing in the housing arena. So if we look at the next slide, what we're focusing on is the main scenario, which is that V-shape or tick-shape recession and recovery. And if we take 2020 overall, what we're anticipating is that construction output falls by 25%, which is significantly worse than we saw during the financial crisis. Now, clearly, the largest impacts of this are at the end of March, in April, and in May. But even as construction activity recovers in the second half of the year, activity in each month is lower than it was in the same month 1 year ago, so contributes to the overall fall for the year. In terms of the biggest affected sectors, we're looking primarily at private house building, which we're anticipating falling by 42%, commercial, which is primarily offices and retail, falling by 36%, and then private housing, RM&I, falling by 35%. There tends to be not much focus on private housing repair, maintenance and improvement because it covers everything from repairing a boiler to doing a conservatory. But it's worth noting that it's the fourth largest construction sector. So just before we go into the chat with Brian, I thought I'd just highlight a few points on the next slide around what the recovery could look like. And the key issues for me are that from a house building point of view, major house builders have returned to site, but they're focusing very much on completions, and they're very reticent to start any new developments unless they have very clear signs of demand. Improvements activity from that RM&I has recovered as the restrictions have eased, but what happens when unemployment rises? So as those furloughs end, after this initial flurry of activity that we have at the moment, that is likely to last into July and August, this is likely to be because of those previously halted projects. So they were started pre-COVID, but stopped, as well as pent-up demand from March to May. After those projects are done, where's the new demand going to come from? In our scenarios, we only have housing and RM&I coming back to pre-COVID-19 levels, so 2019's level of activity in 2022, which at this point seems quite far off. And so the key issues I'm interested in talking to Brian about are what can government do to stimulate activity in the housing arena, which tends to dominate construction activity.
Thank you, Noble. And Brian, thanks for joining us. Yesterday, the Prime Minister has encouraged everyone to build, build, build. Does the construction sector have the necessary support it needs in the current environment?
Well, the 5 billion price tag that seem to be put on that certainly doesn't inspire. I mean, it's about 1.5 weeks worth of construction, which is hardly a new deal. I hate to be cynical about it, and I'm hoping that there'll be other things. But what's very clear at the moment is that there's a lot of uncertainty about where things will go, and as Noble's highlighted. But also there's a lot of uncertainty about how much permanent damage there'll be done, and how do we fill that chasm that might appear within the construction pipelines, as it were. The danger with that, obviously, and one of the concerns that return every time we go into recession, is we lose large numbers of employment within the industry, and that has a permanent damage not only to the economy overall, because people aren't earning and spending, but it also has a problem for the construction sector, where as it recovers, it ends up having to retrain people that it's lost in the past. There's skill shortages which hamper production. So what's not clear is how big the gap will be, but the suspicions have to be, and the caution must be, there must be caution around the fact that it's likely to be quite severe. How severe is uncertain, and I'm not quite sure what the real policy responses will be to that. I can't see any coming through. We already have a running policy legacy, effectively, from the last recession, which is the Help to Buy scheme running through, which is due to end in the next few years, or a couple of years, in fact, and being wound down in that process. So what bothers me to some extent, and I think what Noble and I really need to talk about, is how much uncertainty is there in not just in how bad the problem will be, but also in what the policy responses will be that are sufficient enough to see the industry through. At the moment, I don't actually see any.
I mean, one of the interesting points that springs to mind for me from what you've just said, Brian, is around the employment in construction. Given that you and I are both old enough to remember previous recessions, and in the financial crisis, construction suffered quite a lot in terms of activity, and we lost 481,000 employees within construction, so almost 1/4 of the workforce. If you look back to the 89 to 92 recession, then it was over 600,000 people that we lost from construction. So it's absolutely vital from a construction point of view, not just in the short term, but in the medium term, that we do everything we can to ensure that we don't lose those sorts of people this time around, especially given that you mentioned the legacy of previous recessions and policy. We have a very old age demographic in construction, with a big spike in the domestic workforce at the 50 plus age range, which means in the next 10 to 15 years, we're likely to be losing around 1/4 of the workforce anyway. So what we can't do is end up with a dual effect of the retirees, who are the legacy of previous recessions, and the old age demographic, combined with a short-term damage to the employment in construction at the moment, which raises the question of what can government do in terms of policy stimulus. Like you, I was very underwhelmed by yesterday's policy announcements, which, as you say, were not very much in value, but even more so given that most of them were based on previous policy announcements anyway.
Well, I think just to add a little bit more to the labour shortage problems. I mean, last time round we were effectively bailed out by large numbers of people coming across the waters from Europe to feed the industry, and an awful lot of the younger age group, and this is particularly true in London, were EU nationals. Now, this doesn't seem as if we're going to be able to sort of pull that lever next time round. So, if we're not to have a severe housing shortage, supply shortage and employment shortage in the near future, we've got to be very cautious. I mean, I think, again, to put that into perspective, we know we need more housing. We know we need to improve the existing housing stock. There's billions of pounds worth of work that needs to be done. And if COVID-19 has done anything, it's made people appreciate the value of homes. So one might argue that what we thought we needed perhaps needs to be boosted still further. So the challenges ahead are huge. And if we can't fulfill that, then the nation loses as a whole. Housing is actually an absolute essential to everybody's livelihoods, their welfare, their health, and numerous other things, as well as being a financial asset for large numbers of people. So I think we really need to have some very, very, very serious policies based around housing to be able to cope with this.
On the supply side, you often find that off-site manufacturing is sold as a panacea, given that we may have a skill shortage. What are your views on that?
I've always been very pro increasing innovation and increasing the level of prefabrication within housing, but I've over the years become exceedingly skeptical about our ability to deliver it. I mean, we've got a legacy of failure of new techniques, and I think to pin all our hopes on prefabrication being the answer, I think, is a little bit of a concern. I mean, the first and foremost, very little attention seems to be paid to the fact that it doesn't work within the current business models particularly effectively. I mean, you can talk about the theory and the technologies and how it might work and the site management and all of that, but if it doesn't fit with the business models, then it's not really going to work. I mean, and as I say, I think in the past, to some extent, the problems may have been partly technical, but certainly if you look at the issues of the timber framed housing in the sort of 70s and 80s, that was nothing to do with the technology. It was to do with the site management and the way in which things operated. And an awful lot of that would have been around the business models and the ability to contain it. So I think there are huge hurdles to that. So I don't think that we should pin all our hopes on that solving the problem.
And coming from my perspective, which is the product manufacturing side, so most of the companies I deal with make products that go into construction. They are manufacturers. It's interesting to see, given that manufacturing is high investment up front for a long-term rate of return, and it tends to need a consistent rate of return and is based upon relatively stable demand. I think the one thing we've experienced in the pandemic is you need flexibility. In terms of the policy side of things, I mean, if we are to be serious in terms of government stimulating demand on the new build side, but also the repair and maintenance side, what do you think we could do?
I think to start with, we've got to recognise the scale of it. I mean, we can keep talking as we like about building new homes, and that's extremely important. But Bayes, the business department Bayes, I think came up with a figure of something like about 35 to 65 billion needed just to get the existing housing stock to meet their targets, their eco targets, effectively. And that's a huge amount of money to go into it, and that won't be solved by prefabrication. I mean, off-site manufacturing of some sorts may help, but not in terms of improving the sort of various products to be used. But that's a major challenge. So I think we do need to concentrate hugely on maintaining the existing workforce as much as we can, keeping the skills there, and furthermore, making sure that people don't associate working in construction with periods of unemployment, which damages the desire of others to come into it. So I think that still remains a big issue for me. And so I think what we need to be able to do is to sustain both new build and repair and maintenance through this. And I mean, I would, in terms of policy, we don't know what the scale of the problem will be, but we need to have a mechanism that can deal with potentially a large drop in production through the existing channels. And an idea that you and I both championed in the last recession seems like a sensible one to go back to, which was the concept of quantitative easing being used as a mechanism to fund house building. I mean, that might sound a bit weird, but basically quantitative easing is in effect an asset purchase scheme by the Bank of England. And what you would need to do is to create an asset that they could purchase, and that would be, say, a developer of last resort with assets, etc. It might be land or whatever that is put together, is created, and then the Bank of England steps in and buys the assets. And the focus of that developer of last resort, if you like, would be to create better communities, better housing, but primarily using the existing resources available, so the house builders, the contractors and the supply chains, to keep the whole thing moving. And that hopefully would support the skills, and the level of activity could to some extent be pegged, if you like, to maintain that or to deliver what else. And the idea would be that this would keep the construction process going. And the key to this is not to get hung up about what tenure it is. In the first instance, the key here is to build homes. How they end up in a tenure is important, but a separate issue. And if we can divorce those two things in our minds, I think that would help. So effectively, these houses would be sustained through a period. At the end of the life of this, they would then be sold off to councils, to housing associations, privately or whatever. But the key thing is that they will have, that developer will have generated sustainable, good communities with good housing. And if it's funded correctly, in the end, it benefits the Treasury hugely, because it sustains employment. It has an asset against which all of this money is borrowed anyway, in a sense. And all of that can be targeted to keep people in jobs, doing work that needs to be done. And as they're doing that, they're feeding their own local economies, which boosts the economy overall. To me, that still seems like one of the better options. And it doesn't cut anybody out. It just keeps the work level at the level that we desire it to be. So I think that it's on the news side. I don't know what your view is these days on that.
Yeah, I mean, I think it's a very good idea. And to give people a background to how it came up, around 12 years ago, so in 2008, we were actually pushing with government as construction and particularly house building was collapsing. We were pushing the policy intervention that government should actually be investing in house building counter-cyclically. It could save 150,000 jobs. The Treasury would earn an extra £16 billion in addition to getting its finance back, and we'd be creating 200,000 new homes. But the view of government at the time was that public debt was a problem, and it was not willing to increase it further, despite the fact that by sustaining jobs, you would actually have people in employment paying taxes and contributing towards the economy rather than forcing them into unemployment and drawing out. So in response to that, that's how we ended up with quantitative easing for house building as a concept, because that wouldn't have added to the public debt. And it still seems just as valid now, even more so given that the Bank of England has clearly signalled its willingness to do quantitative easing, given that we've had another £200 billion worth of quantitative easing in recent weeks. And as what is going to be difficult for the Bank of England long term is withdrawing the quantitative easing. This has the additional benefit over and above the jobs that are saved, over and above the homes that are built, has the additional benefit of the Bank of England having an additional way of unwinding quantitative easing. So it's a no-brainer on my part. It has.
And I think the other thing that gets lost in this as well is that this funding goes to every community, so that all communities, it's getting to the people that really need this kind of support. That's the thing that appeals to me as much as anything else. But so I think I would hopefully look to push that again this time round and see if it gains any traction with government. It certainly doesn't seem to be a problem. I haven't heard of a problem over the 10 years or so that we've discussed it before.
It certainly has a lot of positives, and as opposed to standard quantitative easing where you flood the financial system with cash, this is a way in which the quantitative easing has a direct positive benefit and doesn't just get capitalized into asset prices, whether it be the stock market or house prices, which sounds like a very good additional policy potentially for new house building. And I think it's worth talking about RM&I briefly, repair, maintenance, and improvement, because it's such a big sector, because it's so labor intensive. And I think what I'd be interested in is what policies could we see there, given that previous policies we've seen from government, which focus on, say, Green Deal, was, let's not put it mildly, it was a debacle. Industry's ideas for stimulating RM&I just tend to focus on VAT, which, if you do any econometric modeling of RM&I activity, it shows that VAT changes tend to make very little difference to RM&I activity. And you know yourself that, quite frankly, you could negotiate with your SME contractor and get a substantial discount if you're savvy enough that would be greater than a VAT discount. So given that government and industry are struggling with novel ways in which we could stimulate activity, I mean, are there any other ways?
It's a really complex market because you've got a lot of different people with different needs, and I suspect that the answer to this is multiple different policies, rather than just hoping that you've come up with one that does it. I mean, I think part of the problem with Green Deal was the idea that it was so good and it would work across all sectors, etc. But that doesn't get away from the fact that we really do need to improve the housing stock. I mean, over 4 million homes in England alone fall below decent home standards, and they need to be lifted. And large numbers of housing sort of fails to meet even relatively low level EPC energy performance certificate standards. So I think that's something we have to deal with. I mean, one of the big hurdles, certainly within elements of of home ownership, particularly where the bigger issues tend to be, it's easier to some extent to push through policies that encourage housing associations or big owners of properties to deliver standards. That can be done through regulatory measures. The private sector tends to be slightly more problematic, but one of the problems they have, and clearly we all know, I mean, you just can't pick up 30 grand or whatever it might be to do something, 10 grand or whatever. Not everybody can just pick that kind of money up and run with it. So if we could find a way of getting people to getting people to finance, that would be a good idea. And one kind of idea that comes to my mind, given that interest rates, borrowing rates for the government are so low, some might argue negative, in fact, it might be an idea if the government provides money directly to people who have a good case to improve their home, and they would link that to eco standards of one sort or another. And the idea would be that they would offer an interest-free loan or negligible or zero interest loan to people, which would be, say, charged against the value of the house, or if it proved reasonable, an equity stake in the house. But I think the charge would probably be better, because I think people would be unhappier with somebody taking an equity stake, and that would then be returned. Now, within that, the government could say, okay, you can do a new loft, you could do a new extension, you could do all of these things, which probably a lot of people want to do now if they're thinking of working at home or whatever else. And that would give that kind of funding. But it would be pegged to the idea that you reach certain eco standards. And if you could get enough people interested, you may well get to, and if you targeted the right kind of areas, you may well be able to get multiple houses on a street buying into this idea. And if you can get that, then you can start unlocking some of the economies of scale, that the potential for economies of scale, whereby you know the types of houses that are there, and you can provide standard products across them and gain an awful lot of benefits from that. I mean, that I think is as the seeds of an idea which I think could work, particularly for people that are older, that may be equity rich but cash poor, or younger people maybe who just don't have the wherewithal to be able to raise that kind of money but bought an older house.
And so the loan is only repaid as the property is sold. So
Sorry?
The loan is only repaid after the property is sold. So it's effectively a help to buy for the
was a help to
private
fix.
housing repair, maintenance, and improvement. A sort of help to fix, yes, if you like.
Help to
And
fix.
so it's an interesting idea, and it certainly does appear to overcome that initial problem of where is that big one-off chunk of finance going to come from, which is what Help to Buy was essentially there to overcome the issue of.
I think
it certainly has some good properties to it, I think.
Yeah, I think it gets over a number of it's trying to keep it as simple as possible. Nobody's going to say this is the only answer to the problems we have improving homes, but it could be one of the answers to a particularly awkward sector of the market, which may well, certainly older people, and also, as I say, younger people who may now need a spare room to work in. Who knows?
Noble Brian, I think we're coming towards the end of our time there, but thank you very much. That was an absolutely fascinating conversation, and I suspect there'll be more interest in the idea of off-site manufacture and prefabrication, so we may invite you to join us later in the summer to discuss that in more detail. But once again, thank you very much. It's been absolutely fascinating, and thank you to everyone for tuning in.